All right, hello everybody. So today what I'm going to be doing is focusing on a particular topic, and the topic is basically trading pullbacks. And then we're going to hone in on where to find trades, pullback, where to find pullback trades. All right, now when we think about where to find pullback trades, we need to identify where price will pull back and potentially turn back up or down if it's in a bear trend. And how to plan for it in terms of So I'll just keep it simple right now. Right, so the topic here I'll just keep it that simple. All right. So where to look for a pullback? Now, the way to do this in many situations or many cases, you may already think this is simple, but it's not. It's fairly complicated, and there are multiple ways to do this. So some methods that you may know of are something like this, where you look for the pullback of support, resistance becomes support. So it's like pullback to test the breakout. So that's one. Or if you're in this type of situation, you might find the trade here on a spring. That's a spring, by the way, because it's below this low, no follow through and reversal back up. And this is test of the breakout. And then there's other methods, right? There's what they call this? Demand zone. Right? So what I'm going to teach today can be used by itself, or it can be used with any of these approaches. All right, it can be used by itself or any of these approaches. It really doesn't matter. Okay, it can be incorporated in any of these three things. In fact, it should make this stronger and more highly probable. Okay, you should make any one of these trades, whether it's to the demand zone or the pullback or whatever. Demand, what's supply and demand zone. So this is a pullback. This is a pullback, a deeper pullback, right? Something like that. And this is whatever, another pullback. But this pullback is a spring of the first low that establishes a support level. Anyway, so what I'm going to explain is how to trade a pullback, where to look for a pullback, and you can take this by itself, this information, or incorporate it in any of these three models. It's up to you. Any of these models, right? Okay, so what I'm going to explain is based on looking for strong demand or supply levels already based on volume. It's that straightforward. Looking for strong supply demand based levels based on volume. This can be added to here, to here, to here. Okay? Based on volume, which is I mean, that's it. It's basically, you know, where did they buy? Where did they buy before, and look for the places they're going to buy again. But it has to be backed by a strong volume, and I'm going to explain why this makes so much sense. Okay, first of all, if you're using one of these approaches, these three models, right? You don't know if the pullback will go to the test of the breakout or if it'll go deeper into the demand zone. So many traders, they make the error of looking for it to come to the demand zone, but it doesn't go that low. It only goes to the pullback, sometimes a little higher than the former former resistance, and then it just goes. So you miss the trade because you were looking to get in around here, but it went here. It went higher and reversed. Right? If this happened to you, what I'm going to teach today is going to help you like crazy. All right? And then for other folks who are looking to trace the breakout, the test of this breakout, is going to help you too, because you'll wait for this level. All right? Or if you break even, you'll know the next level to look at based on clear evidence. Clear evidence that is data in front of you showing you where to look for trade. All right? So, that said, we're looking for strong demand and supply levels based on volume. Why? Because that's where they bought. That's where they bought before. This is evidence. That's one reason. And second reason is, and I'm going to explain the edges here. All right, that's where instead of saying they, I should say existing traders. Let's just call it buyers. All right, make it very, very, very simple. Buyers bought before. All right, so existing buyers bought at those levels before. What do you know then? Now, folks will say, oh, existing buyers, we don't know if it's good, they're going to be there, and this and that, and blah, 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 right? Here's the fact. Here is a fact. I'm going to explain. If existing buyers bought there, that's where sellers will look to exit losing positions. Okay? Now here's the thing. If you're thinking, okay, buyers bought that on Monday, I don't know if it's gonna work on Tuesday or Wednesday or Thursday. But here's the fact. If buyers are not there, the sellers are still stuck. That's a fact. If buyers bought on Monday at a particular level and it moved up, they're in the money. So when price comes back to that level, you don't know if those existing buyers are going to add to their position. You don't know, I agree. But what you do know is that sellers will look to exit their losing positions to break even because they've been underwater, right? And the third thing is existing buyers bought there. There is a possibility, right, that new buyers will also look to buy where existing buyers bought. Okay? All right, so let me just say that's where existing buyers bought before. That's a fact, too. We don't know this for certain, but we know that it may be where existing buyers might buy more. Add. It may be where new buyers also want to buy. So these are maybes, right? These are maybes. We know a fact is what existing buyers bought. We know that they may want to add to the position. We also know that new buyers may also want to get in on the action. And we know, and this is not a maybe, that this is where shorts that are losing money will want to cover. All right, will want to cover shorts at break. This is not a maybe. If you got shorts, they're underwater, they're in the wrong side, they're going to want to exit, right? So the reason why, these four are the key reasons. All right. Now you can see how this is different than looking for a pattern that has no sense. Right? If I just show you a pattern, believe me, I see head and shoulders all the time. Half of them don't work. Maybe more they don't work. So, but what I'm showing you is these strong demand and supply levels are based on volume. Volume means they're existing buyers and sellers. Existing buyers are making money. They might want to add. Existing sellers are underwater. They're losing money. They want to exit. And now we have new buyers and sellers. So new buyers will want to possibly get in on the action. And new sellers probably not, because they see the existing sellers lost money, so it doesn't make sense for them to enter. But it does make sense for existing shorts to exit, so they can break even. Why? I mean, the fear of loss, right? So this here is driven by, obviously, fear of loss. This, I guess, if you were to classify, fear-based, FOMO will be where new buyers want to buy, they're getting a pullback opportunity, and existing shorts want to exit because they don't want to lose money. All right, so I'm done with this, and I think I've explained it simply to understand. All right, now let's see if this works. For this, you're going to need a volume at price chart, whatever it is, whatever you use. It could be a Renko with volume, it could be a footprint, it could be tape reading chart with volume, it could be point figure with volume, it could be candle with volume. The point is you have volume. It could be volume profile, whatever. You need this because you need to see where strong and where those levels are based on volume. So volume at price will show you that. That's what you need. All right. Okay, and now what we're going to do is we're going to take a look at those bar chart alongside a volume, a price chart, and we're going to see what happens. We're going to take a look at what happened last week in two markets. I'm not cherry picking nothing. I'm literally taking the latest data, last week's data, and just showing you. All right, and we'll see how the market reacts. All right, so this is daily chart. It's corresponding tape reading chart, and you got the hourly chart corresponding tape reading chart. Okay, so now we're going to see how it behaves. What are the rules? The rules are when you have higher highs, right? Higher high, higher high. Let me change this to higher high too. So yeah, so basically you have higher highs. We have a bar chart that makes a rally, right? Clearly rallying, has a breakout. And then we're just going to examine where the pullbacks go. Simple as that. Coordinating the bar chart with the tape reading chart. That's all we're going to do. We're just going to look. Because the problem is the bar chart, you don't know where the hell it's going to pull back to. You don't really know. So you're going to use this chart to help you identify those levels where demand was and see if they hold and see if the pullbacks occur. If they don't, they don't. We'll see which ones do, which ones don't, and see if there is a natural edge in the market. All right, so I don't know where to start, but I guess I'll start on the way down and then I'll start on the way up. Okay, we're going to use the lower lows and then we're going to use the higher highs. And then eventually they break, like, you know, eventually the pullback change trend. So then you know, you go from lower lows to looking for higher highs. So right here, we see the market made this break, lower low below these levels, right? In this, where is the high volume? We look at this and we see the first one says 1, the second one says 14, third one says 14, other one says 16, other one says 9. So the other thing I want to mention is when you're pulling back, you want to look for high volume, but you want to look for high volume on the pullback, not towards the extreme of the bar because there's no pullback action left, right? So in that case, you're looking for like a 50% pullback and look at the 50% or more and look at the high volume there. So the first level we see is this 16. Right? Does the market pull back? Yeah, it does. It pulls back and makes a lower low. So it's done with this level, 16. If it pulls back again, I'm going to look for it to come back up here in this area where it went from 1 to 14. That's a pretty big advance. And we see this works. Where's 14? Boom, goes here and goes lower. Now we see, look again at these levels. And we see there's a level here at 3, and there's another high volume here is at 6. what happens? It taps, it holds, it holds. Why? Because it's absorbing. So this 6 here, going across, it's holding the level, it's holding the level, it's holding the level until it absorbs the level and turns trend up. Now we have a higher high. So we have those higher highs, and these are good higher highs. They're like rallies. You can think of them as rallies. And I'm looking at this and I'm seeing a 5, a 4, and a 14. So we say think around that 14 area to see if that holds. Does it hold? Meaning, is that where the pullback goes? And again, if this is related to the hourly, right? You just go on a lower time frame and you'll see how it works. So maybe I'll show that as well. Right? So there's the higher high. This higher high is this rally. Is this higher high. Now this higher high has that 14 right there. This 14 here is the largest print in the rally. And this is why this area here on the bar chart is holding. All right, so, okay. Now we go to the next higher high, which is this rally. All right. Actually, there's one here. All right, there's one here. So that one is this one, right? And we see it pulls back and holds this level. Why is that? If you look here, you have this 10. So it was going to hold this level. We go from 3 to 10 to 10 to up to 5. So it's going to go to these 10s. So that's around where this goes. Anyway, let's take a look at the next rally is this. In the next rally, we see a very clean, very easy to trade area. Very easy. Why? Because it sticks out like a sore thumb. If you have 3, and then you have 2 and 2 and 2 and 4, and you have a 10, where the hell do you think it's going to go? Right? So we have a 10. 10, by the way, is 10 times 10,000. So this is not a small amount. This is 100,000 contracts. I'm not just saying 10. I've divided it by 10,000. So this 10 here is 100,000 contracts. And we see price perfectly goes down to this level, right? And then boom. Okay? You see that? So first of all, I just want to make sure that I'm explaining. This doesn't mean you automatically buy and sell. You have to see what's going on at those levels. I'm just showing you a method of trade location that's based off of what I just explained. All right? So that 10, market went down there, tapped, and went up. Now, using the same logic, there is a level at 16. You see that? There is a level at 16. There was also a level at 13, and I think that's why this fucker right here bounced. because there's 16 and there's 6 and then 13 because it broke above those prior highs, and price just went to the 13 area and did a little bounce, you know. So now I'm looking for it to come a little deeper into that level here, 16. Okay, so now I have shown you on this chart how it's done. Now I also want to make a point here. It is very important for you to look at these levels and read them to see this is 16, this is 13, this is 12, this is 3, this is only 2, right? The problem with most of what I see online and on, you know, on what folks have is they have too much data that's not compressed. So they have a candle chart and every little price level has a volume on the bid ask, bid ask, bid ask, bid ask, bid ask. If you do that, you go crazy because there's no way you can read all the bid asks. There's no way your mind can prepare in advance and be like, this price has this and this price has that at every single tick. It's not possible. So what happens with a lot of the various platforms and approaches, they don't read the actual volume, and people lose that intuitive sense, that confidence. So what they're going to do is they're going to just highlight it with a red box, you know, because they can't read all of that. So they'll just take the highest volume prints and highlight them in the red box, similar to what I'm doing with the white box here, but they'll have it with the red boxes and too many of them. So you'll be lost up there in the candle and below in the candle. And this is the problem, where you have too much information and haven't consolidated it to the point where it's human readable for you, the trader. So I wanted to make that point so you don't make that error, because a lot of, there's a lot of other dumb shit. So I'm not going to mention all of it, but I think you get the idea. So what you need to do is be able to easily read the chart, and that means consolidating the prices and their volume so you can easily see it. If you can't see it, you cannot plan for it. Can't plan for it, can't take advantage of the trading opportunity, and will be reliant on indicators. If you do that, there's going to be confidence in issues, because it just won't make sense. So there's going to be a lot of issues. It'll be indicator based, and if it's totally based like that, it just results in a lot of losses that way. So I know about this because I've gone through all of that. Anyway, so here what I'm showing you is you have a 5, you have a 16. That's 160,000 contracts untested. Above that, you had 130, and look what happened. When it got tested, it made a high. That's what happened here. Okay, that's why, you had that, and that was a good level. They tapped it and went up. Now, there is one thing here, this is a lot of volume up here. There's 200,000 contracts traded. I think it was near the end of the day, so they exited. So that should create enough pressure for it to come back down. It's already testing the 140,000 contracts. We'll see how it dances there and whether it moves up or whether it comes back down to this level where there's demand. There was prior demand, and that means we know that there are shorts that want to exit. Because those existing shorts want to exit, like I explained in the beginning, it can create a bounce. Because 160,000, someone else took the other side of that trade, and guess what? They're underwater. So if you are 100, if you're underwater, price comes back, you want to break even. That break even creates what? Buy to cover. Buy to cover will do what? Create buying pressure. So now the question is, will the existing longs add, and will new longs add? Because the trend is up. And if they do, then you have chances of existing shorts, existing longs, and new longs, and all that will depend on will impact how much the market rallies. Anyway, so that's the idea. So we're waiting for that, and here you have 140,000. So you have this little bounce already happening here, right? Because you have 30,000 here, 140,000 tap, so they might bounce, So anyway, I've shown you the approach. Now we'll just take the same thing and go on a higher time frame and use our brains to see what's going on up here. All right, and I'll show you the exact where, I'm not sure if I even took this trade. I might have, because I was planning for this in advance. I just can't remember because I don't remember. Anyway, the point here is that you had this high. You had 109, I don't know what the hell, this is 19. 19 times 100,000. 1.9 million contracts traded here. From 400,000, 400,000, 500,000 to almost 4 times that amount. 1.9 million contracts traded, boom. And guess what happened? Market pulled back to that level, and that's where you got more buying activity. Either existing and new buyers as well, they may have done it, or I don't know, or existing shorts covering, whatever. They came in here and they took the market higher, right? So this is what this. Anyway, so what am I looking for now? If it pulls back, look at this level right here. Y has a lot of volume, all this shit across this area, plus this 1.9 million. So it comes back, we'll see, what happens. So that's the level there, and that's the level there. Now we'll take the same approach to show you this not bullshit into crude. All right, so where do I start? All right, so crude had this lower low, right? This lower low rally. And what we see is we have 19 up here, so this is definitely a good level. But it's pretty high up. I don't know if the retracement is going to go up there. So after that, we have a 5, not that great. Then we have this 8. This is okay, right? I wouldn't trade this 8 right away, but because we have this other red bar after it, we can get a pullback that's 40-50% back that can give you something, right? And I'm also looking at this 5 because that's what caused the breakdown. So the 5 and the 8 looks very appealing. So market pulls back, and this time it comes back around that 8, around that 5 level. Basically testing, and it tests around this area on this secondary test right here. So the 19, after that the 5, then maybe the 8, but I'm looking for it to come back here, possibly here, to have a deeper retracement, right? Because I don't want to just get a shitty location because I have to put the stop somewhere. And anyway, so now we have this next rally down. We have 2, 5, and then when it takes out this low, we have 11. Mark that 11. 2, 5, 11. Where does the market pull back? 11 goes right into that area, and it breaks. Now we have another lower low. We have that 13. I would love for it to come back there, but it doesn't because it's too high up. So I'm looking at this 7. I don't want to get it here at the 6 is too close to the low. So around the 7 is a good area, but no cigar. All right, it doesn't pull back. And it continues to go lower. So we have another lower low. And you have the 4, 14, 10, 13, 20. obviously you're not going to take, you're not going to look at the pullback all the way at the bottom, because it could A, be a climax, and two, it's not even a 25% pullback. So you need to pull back and look at the high volume area around there. So you see that what's there is this 14. Yeah. It misses the mark on that first test. It doesn't go to the 14. It only goes to the 10. So if it went one more box, it would have been a nice trade, but whatever. Right? Sometimes you don't get it, you miss by one box, so that you can't do anything about. Other times what will happen is it'll pull back and then it'll retest and go into that area. However, at this point, I'm going to have to take a step back because there's too much volume coming, here, and I have to see, how the market plays out. All right, let's go to the next chart. I don't know what the hell I was doing over here, writing pullbacks. Whatever. Market went to 13, pulled back, tested at the 7, near the 7 and 13 here. Where the box, right? Test, break. Where's the reversal? You can very clearly see it's just, in this area, it's just weird, right? So I don't want to do anything until I get the higher high signals, because it needs to clearly break, right? So I don't really, there's too much sideways action here. But over here, you have this 20, then you have the higher high, then you have a pullback, and then it basically initiates the entire trend, right? On this daily chart. Now, what's interesting about this is when we have these higher highs and all this volume and all of that, and the market pulls back, what happens when it doesn't hold? The market pulls back, but the pullback becomes broken. So when that happens, the chances are very high that you have a change in trend. Okay, so I'm of the opinion that, I don't know, maybe this was climactic or whatever, but here, this low took out all of these bars, right? So what am I looking for here? Obviously, it would be great if you get a deep pullback to the 26s, but most likely it'll be a pullback to the 16. So that's the area that I'm going to be looking at. Can it go up to that 16 area? It's possible, but depending on how much of a retracement we get. So I'll just be looking at what happens when price bounces here and tests. Okay, it'll be great if I get this 26 area, but chances are that's a pretty deep retracement, and this is not the ES. These markets are a little bit thinner, so they may or may not, and it may just go to this where it says the 16. This, by the way, is 16 times 10,000, so it's 160,000 contracts on this break here. So chances are I'll just test this area and then puke, or spring it, or I'm not spring it, but upthrust it. So we'll see how it handles this area, which is the 74s. After that, 76s. So long story short, I'm showing, This approach of looking for trade location based off of volume, it's basically looking for pullbacks into areas of high volume for all the reasons I mentioned. Existing traders took a position there. They possibly may add to that position. New traders may want to get in at those levels because existing traders that were in at those levels are in the money. Existing shorts will want to exit because they're out of the money. They're underwater. They have losses. They want to break even. Okay, and we're looking at the volume here to see how price behaves when it goes to places where existing traders are profitable and where losing traders will want to cover, to see if more selling comes out at those levels and whether we can participate. All right, so that was the lesson today, folks. Hope you enjoyed it. You just apply the same logic. There's nothing about this that is mind-boggling. It's just looking at where the people traded and quantifying that and using simple understanding of, if people made money, they may want to continue to make money buying there, and if people lost money, they want to exit. So, all right. Thank you. Have a good weekend. Bye.